Banking Ombudsman. So, friends, see what is Ombudsman basically? It is the official who is appointed to receive the complaint and investigate the public grievance against the government or the government authorities. So, what is the Ombudsman? Ombudsman simply it is the authority who is appointed to for the purpose only to receive the complaint and investigate about that complaint that may be against any government or the authority. Okay, now based on that we have to see the banking ombudsman. So obviously banking ombudsman it is authority originally established under the banking ombudsman scheme 1995. So basically the first in the country that ombudsman came in 1995. This is basically by the RBI in exercising the power vested in the Section 35A of the Banking Regulation Act. So, as per Section 35A of the Banking Regulation Act, RBI has established the Banking Ombudsman Scheme. That scheme aimed at resolution of the complaint against the commercial banks. And in the 1995, the RRBs were excluded from the Banking Ombudsman. So, they were only applicable to the commercial bank and the scheduled primary cooperative bank. Then it was modified, the Banking Ombudsman Scheme 2002 and later by the Banking Ombudsman Scheme 2006. What was the purpose of modification? Simply to enlarge and extend the scope of the authority and functions of the Banking Ombudsman for what? For readdressal of the grievance against the deficiency in the banking service concerning loans, advances and other specified matter. So see, two times they have modified the scheme in 2002 and 2006. What was the purpose? To expand the functions, to expand the scope, to expand the authority, and they have included the deficiency in the banking services under the Banking Ombudsman scheme. Apart from that, the loan, advance and other specified matter that can be readdressed to the Banking Ombudsman. All commercial bank, regional rural bank RRB and the scheduled primary cooperative banks were required to comply the modified scheme. So you can note here, when in 1995 that ombudsman scheme came, that time RRB were excluded. But after the modification, the RRB is also included. Now RRB is also under the Banking Ombudsman. See, RBI guideline with respect to the integrated ombudsman scheme to 2021. So later on, they have again revised some guideline on the Banking Ombudsman in 2021. Whatever that guideline that we will see. So the scheme integrate the existing three ombudsman scheme of the RBI. So basically there were three schemes separately. First was the Banking Ombudsman scheme 2006, then the ombudsman scheme for NBFC 2018 and ombudsman scheme for digital transaction 2019. So that three scheme basically amalgamated and to form the simple single scheme for the that is called as the integrated ombudsman scheme 2021, right? So that's three scheme basically got combined into to frame the separate revised guideline under the integrated ombudsman scheme 2021. So this scheme framed by the Reserve Bank under Section 35A of the Banking Regulation Act 1949. Section 10 of the 1949 Act. Apart from that, Section 14(5)(l) of the RBI Act 1934, majorly Section 2 of 1934 and Section 18 of the Payment and Settlement System Act 2007. Apart from that, Section 51 of the 2007 Act. So basically to combine, so basically we have to integrate banking also, we have to integrate NBFCs also, we have to integrate digital transactions. So they have taken the base of all the act, including the Payment Settlement Act 2007, RBI Act 1934 and the Banking Regulation Act 1949. So based on that three act and sections, the RBI has framed the new integrated ombudsman scheme 2021. So this is focused to provide a cost-free readdress of the customer complaint involving deficiency in the service rendered by the entity who are regulated by the RBI. So what are the entity regulated by RBI? For example, banks, NBFC, etc. If not resolved to the satisfaction of the customer or not replied within a period of 30 days by the entity. That means when customer approach to the bank, if a bank is not responding that customer within 30 days, then the person can complain into the ombudsman. Okay, so 30 days that a person has to wait with the bank itself. Now the scheme include under this under its ambit of non-scheduled primary cooperative banks with deposit size of 50 crores and above. So the non-scheduled primary cooperative bank, the mainly the primary cooperative banks who are non-scheduled, non-scheduled means what, they were not part of the second schedule of the RBI, right? And if their deposit is more than 50 crore, they have to follow the banking ombudsman scheme, that is integrated ombudsman scheme 2021. Okay, so obviously this scheme adopt the one nation one ombudsman scheme approach by making the RBI ombudsman mechanism, it is like a jurisdiction neutral. Okay, so there is a one nation one ombudsman, because for even banking, NBFC, digital transaction, everywhere there is only one ombudsman. Okay, now these are some silent feature of the integrated ombudsman scheme 2021. So what are the features? See, complainant no longer need to identify which scheme they have to file the complaint, because they have integrated 3 schemes. So no need to worry about where you have to apply particularly, right? Because only one scheme now it is available. The scheme now allows complainant to be filed the deficiency in the service with some exclusion. So obviously, if you are not getting proper service, customer can file the complaint under the tab called as the deficiency in the service. This means that complaints won't be rejected just because they are not covered under the listed ground. Okay, so there is one more category they have developed called as the deficiency in the services. The customer can file the complaint under the deficiency in the services, right? Next, the scheme has removed the jurisdiction of each ombudsman office. So there is no any office. For example, if you are belonging from the Thiruvananthapuram, right, and you are now in Mumbai, so you can file your complaint in Mumbai. There is no any jurisdiction for the ombudsman office. Anybody anywhere from India can do the complaint. Okay, for that purpose, a centralized receipt processing center CRPC has been set up at the RBI Chandigarh, right, and mainly for receipt and the initial processing of the physical and email complaint in any language. Right, you can do complaint in any language, they will process it, and for that purpose they are having the CRPC at the RBI Chandigarh office. The general manager in the public sector bank or its equivalent is responsible for representing the regulated entity and providing information about the customer complaint. So who is responsible? Obviously, in the banks they have to appoint the officer equivalent to rank 2 of general manager, right? The regulatory entity, that is what, say simply the banks will have the right to appeal in case where award is issued by the ombudsman against it. So if the banking ombudsman gives reward as a result or the direction that a customer complaint is right and you have to follow, in such cases bank has a chance to get appeal, right, for not furnishing the satisfactory and timely information document, right? So obviously, when the bank is not will not have any right to appeal in case where the award is issued by the ombudsman against it for not furnishing the satisfactory and timely information, means what, see, bank have right to file the appeal, but in only cases if the ombudsman asks some document from the bank and bank is not giving that document to the ombudsman. In such cases, the ombudsman can't wait for the longer duration, right? So he can directly give the reward, that is what, the result of the complaint, right? And that reward, that result, that direction will be final if you are not submitting information document timely to the ombudsman. Now, who will be the appellate authority in such cases? The executive director in charge of the consumer education and the protection department of RBI will be the appellate authority for the banking ombudsman. So who is the appellate authority? It is important to note for exam point of view also. The appellate authority in case of the banking ombudsman is what? He is the ED of what? Of consumer education and protection department of the RBI. Okay, that is you have to remember. Okay, the consolidated integrated ombudsman scheme 2021 is applicable to the banks, NBFC and CIC also. CIC means what? The credit information company, right? Because we have formed this integrated ombudsman scheme as a result of amalgamation of the previous schemes. Now the ombudsman scheme 2021 is detailed more elaborately. We have to discuss in chapter called as the Reserve Bank and the integrated ombudsman scheme 2021. Now what is the responsibility of the principal nodal officer? So the regulatory entity, say bank, is required to appoint the principal nodal officer at the head office. who must hold the rank at least the general manager or equivalent. So who will be there must be one officer called as the principal nodal officer will be appointed at the head office. Then that officer has to provide the information on behalf of the entity called as the say bank, right, regarding the complaint which are filed against the bank. So the regulated entity say bank is also appointed the additional can also appoint the additional nodal officers to assist to help the principal nodal officer as needed for the operational efficiency. Okay, so more than one nodal officer can be appointed depending on the bank. Now in that regard, it is important to note about the some fact about the Limitation Act 1963. So the Supreme Court recently ruled that the banking ombudsman may lose the jurisdiction over the complaint if the matter is taken to the court or the tribunal. That means, see, if there is a complaint that is both in the banking ombudsman also and in the court also, in such a cases the banking ombudsman will not have any right further, right, because the complaint is in the court or with the tribunal, then court and tribunal will have more power than the ombudsman. Now the ombudsman can only proceed with the complaint if they have jurisdiction and the matter is not been taken to another forum. If the matter is not in the court, not with the tribunal, then only the banking ombudsman can deal with the complaint, otherwise they have to leave it. The relief granted by the ombudsman cannot conflict with the more comprehensive application, the adjudication by the court. So obviously, whatever direction given by the ombudsman should not have any conflict with the order given by the court or the tribunal. If the ombudsman find that subject matter of the dispute and has been taken to another forum, then they must decline the jurisdiction to pass order. So if any complaint lies with the ombudsman also and the court also, right, in such cases the ombudsman have to say that we will not deal with this case because this case is already in a civil court or any court or with any tribunal. Okay. Now the ombudsman can request for information from the bank and they can try to reach the settlement. If the complaint isn't settled within the month, the ombudsman can make a decision based on the evidence of the banking law. So obviously that power has given to the ombudsman that within a month they can settle the result, because if they are not getting proper support or the document even, right, based on that also they can take the decision within a month based on what? Based on the banking laws and the evidence they are having. The bank isn't bounded by the decision unless the complainant accepts it within 15 days. So whatever decision given by the ombudsman, right? So for example, any order is given by the ombudsman, right? If that complainant accepts whatever the reward or the order given by the ombudsman within the 15 days of that reward, then only the bank is bound to it. If customer reject that order, then bank is not bound to it. Okay, that means whatever order given by, that should be accepted by the customer, the complainant, within 15 days. Bank must comply the decision within 1 month, and bank will get 30 days to follow the direction given by the ombudsman. Either party disagree with the decision, they can appeal to the deputy governor of the Reserve Bank, and if any party is not agreed, then they can do the appeal to the deputy governor of the Reserve Bank. Okay, banking ombudsman and other bank directions. So the Supreme Court has also observed that the ombudsman is obliged to comply with the direction circular which are issued by the RBI under section 35A or 21 of the Banking Regulation Act. Ombudsman is also required to issue the direction to the bank based on the Reserve Bank direction circular ensures the compliance. Ombudsman cannot ignore the circular direction while dealing with the complaint. So obviously the ombudsman should take care whatever the direction, whatever the guideline and whatever the circulars issued by RBI, right? Because ombudsman should only not only focus only the complaint received. The ombudsman have to look after whatever the direction, guidelines, circulars given by RBI also, right? And based on that, the ombudsman have to deal in such a way that they have to follow whether it is following by the bank or not. Because see, ombudsman is dealing based on what? Based on the direction received from the RBI. So what is the ground to take the decision? So whatever the direction, guideline received by RBI time to time, that will be the ground for giving the any award by the ombudsman. That's why the Supreme Court said that the Ombudsman cannot ignore the circular and the direction given by RBI while dealing with the complaint by the customers of the bank. So, Banking Ombudsman Debt Recovery Tribunal. So, what happen if there is some conflict between the Ombudsman and the DRT? So, in such a cases, the scheme formulated by the Reserve Bank under the Banking Regulation Act 1949 cannot override the provision of the Debt Recovery Tribunal. That means what? So DRT is always above than the Ombudsman. This is what the simply in one line, right? Why? See, the Allahabad High Court observed that the purpose of the Banking Ombudsman is to resolve the complaint, and the purpose of the DRT is we have to recover the debt to the bank. Okay, so whatever scheme we are going to formulate using the Banking Regulation Act or the RBI Act, that should not having overriding effect over the DRT Act, because DRT purpose is very much clear. Okay, so we can say Ombudsman scheme is just below the DRT, because DRT is having overriding effect over the Ombudsman. Okay, so who will you have to follow? You have to choose among them. Then you have to follow the order of DRT, not the Ombudsman. Okay, regulation to strengthen the financial stability. See, RBI ensures the financial stability. The purpose of itself is to maintain the financial stability in the country. So, the financial stability is defined by the RBI in the Financial Stability Report as what? As providing critical services to the real economy without discontinuity. We have to provide the services without discontinuity. That is what? The financial stability. IMF working paper define the financial stability as what? As a capable of facilitating the performance of the economy and dissipating the financial imbalances. There is a provision in the BR Act 1949 and the RBI Act 1934 that regulate the bank for financial stability. So basically, it is important to have the financial stability. So how financial stability is defined? It is defined by the RBI also. It is defined by the IMF working paper also, right? And the two Act 1949 BR Act and the RBI Act 1934 empowers to maintain the financial stability in the country by the RBI. Okay. Now see, reserve fund. How to maintain the financial stability? For that purpose, we have to look after some reserve, right? See, how to maintain financial stability? To maintain the stability, right? See how you can be stable if you have enough fund with you, right? Then you can say I am financially stable, I am having lot of fund. So for that purpose, to maintain the stability in the country, RBI has mandated the bank that they should maintain some reserve to have the financial stability, right? So see here, see creation of reserve fund. So every banking company incorporated in India has to create a reserve fund, right? So this is what? This is under section 17 of the Banking Regulation Act. So creation of the reserve is as per section 17(1) of the Banking Regulation Act. Every year a sum of equivalent of what? Not less than 20% of a profit has to be transferred to reserve fund before any dividend is declared. So as per the act, the 20% supposed to give to the reserve fund out of the profit which we are having in that year, and that must be before declaration of the dividend. Why? Because after declaration of dividend, profits will get decreased, so remaining amount will be less. So that's why the before declaration of fund you have to transfer the part of profit to the reserve fund. But RBI has given again the direction that the scheduled commercial bank transferred to the reserve fund now increased to the 25% of the net profit after tax since 31st March 2001. But this is not applicable for the foreign bank, right? For that the existing will continue. Okay, only for the scheduled commercial bank they have to transfer 25% of the net profit after tax. That is what the profit after tax. Out of that, 1/4 profit they have to transfer to the reserve fund. Okay, now it has been decided that the transfer to reserve may be made after the adjustment or the provision towards the bonus to the staff. Again, whatever the provision you are doing for the salary or the bonuses to the staff, you can exclude. Then after that, you can transfer the profit after tax 1/4 to the reserve fund. Okay. Now, amending the act in 2013, amendment. See, the amending the Act of 2013 introduced a new section 29A, which allows the RBI to direct the banking company to provide additional statement or the information about its associate enterprise when it deemed. That means, see, again the section has been amended, and the RBI is empowered to ask any information or the financial statement from the company or its associate company. Okay, so this is not important, but only important here that the 25% out of the profit after tax has to be transferred to the reserve fund, right, to the reserve fund. This is what this is amended in 2001, and this is mainly applicable to the scheduled commercial bank. Okay, and for foreign bank existing criteria will be continued. Okay, now see how you will get the exemption from the contribution. So if any banking company or the bank has adequate paid up capital and the reserve bank may recommend to the government of India for exemption from the contribution to the reserve fund. This is the power is having to the RBI under section 17(1) of the Banking Regulation Act. If RBI think that the bank is having that much of strong paid up capital and they are having enough reserves, then the RBI can ask government that you can exempt this bank from the from making the reserve. If the reserve fund plus a share of premium fund is equal to the paid up capital, then only the central government can issue such a order. Okay, and what is the primary criteria for exemption from the reserve? Whatever the reserve you are having plus share premium fund you are having, that must be equal to the paid up capital. Then only you can get the exemption from maintaining the reserve by direction of the RBI and by recommendation of the RBI and by order of the central government. Okay, so RBI will recommend to central government, and central government can then pass the order, provided the reserve plus the share premium fund that must be equal to the paid up capital. Appropriation from the reserve fund or the share premium account. So what is the appropriation? Means use, right? So in case appropriation or the withdrawal, removal part of the reserve fund, bank has to submit the report to the RBI within 21 days, giving full detail why you have taken some money from the reserve fund. Appropriation means say misuse or the use, or you are taking some fund from that, right? So when you take some fund from the reserve, you have to give detail about to the RBI that why you have taken the fund from the reserve. That should be within 21 days. Okay, now see what is the provision for the foreign bank. So foreign banks, section 17(1) of the Banking Regulation Act is for the creation of the reserve fund, do not apply for the foreign banks, okay, which are operating in India. So for that we are having some separate provision for the foreign banks. So whatever we discussed just before that, the section 17(1) of the BR Act empowers RBI that the bank operating in India should create the reserve fund. This is not applicable for the foreign bank which are operating in India. For them we are having separate provision. What is that provision? As per section 11(2) of the Banking Regulation Act, foreign bank has to deposit with the RBI 20% of the profit of each year in respect of the business in India. So they are having very simple and clear guideline. They have to deposit their fund 20% out of the profit with the RBI each year. For example, they are having 100 crores profit this year, right? So they should deposit out of that 20 crore with the RBI, right? So every year's profit 20% should be kept with the RBI. The amount may be deposited in cash or in the form of approved security. That must be the unencumbered, means not having any legal complications. Okay, so that must be in the form of cash or any approved security, or it may be in the partly cash or partly approved security. Section 11(2)(a) further also provide the exemption by the central government on the recommendation of the RBI where the deposit already made are considered adequate with respect to the deposit liability of the foreign bank. So here again there is a power to central government. They can exempt the maintenance of such a reserve deposit, maintenance of such a reserve deposit by the foreign bank with the RBI. Okay, provided that the RBI says that the deposit with already having with the foreign bank is sufficient to cover the liability to pay the customer, right? So that's then only the central government can issue such a direction. See, maintenance of the cash reserve. So the scheduled bank has to maintain the certain cash reserve with the RBI under section 42 of the RBI Act, and for non-scheduled bank under section 18 of the Banking Regulation Act, they have to provide the cash reserve. Okay, so that section are important. Section 42 of the RBI Act for the scheduled bank, and for non-scheduled bank section 18 of the Banking Regulation Act. Now see, what is this scheduled bank? So the scheduled bank is the bank which included in the second schedule of the RBI Act. Okay, very simple. So what is second schedule? It is the list of bank. Basically, it is the list of banks. So under section 42(6) of the RBI Act, the RBI may include any bank in second schedule. How? If it satisfies the following criteria. So if the paid up capital and the reserve of an aggregate value not less than 5 lakh. Second, if satisfy the RBI that its affairs are to the interest of the depositor, and it may be the state cooperative bank, it may be the company defined in section 3 of the Companies Act, it may be the institution notified by the central government in this behalf, or it may be the incorporation, a corporation, or the company incorporated outside India under the foreign laws. So what is the basic criteria to get included into the second schedule of the RBI Act? Simply, for that scheduled bank, they must have the paid up capital and the reserve having 5 lakh plus. And RBI should think that this bank is working for in the interest of the depositor. It may be the state cooperative bank, it may be the company under section 3 of the Companies Act, it may be the institution notified by the government, or it may be the corporation or the company which may incorporated outside the India. These are also eligible. So basically you can say simple guideline, the paid up capital plus the reserve should be more than 5 lakh. Okay, and in RBI's opinion, that bank has to be working for the interest of depositors. Okay, then only RBI can include that bank into the second schedule of RBI Act. Now, quantum of cash reserve. So see, the cash reserve required to be maintained by the scheduled bank with the RBI, with the reserve bank, is under section 42(1) of the RBI Act. It is what? It is the average daily balance having some percentage of the NDTL. NDTL means net time net demand time liability, NDTL. So CRR for scheduled banks is without any ceiling or floor. There is no ceiling. Earlier there was ceiling that 3% should be the limit for the CRR, but now that CRR limit has been removed. So CRR means cash reserve ratio. So average daily balance for this purpose means the average balance held at the close of business of each day fortnight. Okay, so for the calculation of average daily balance, you have to take consideration of each day's closing balance, and that should be for fortnightly, means we submit the report fortnight basis every 15 days. The liability for this purpose do not include the paid up capital, reserve, or any credit balance. So obviously we have to keep the CRR low, because we need more fund for the lending purpose. So for that purpose, the paid up capital and the reserve and whatever the credit balance in that in the profit loss account, that can be exempted from for the calculation of the liabilities. Further, the amount borrowed from the RBI, IDBI, Exim, or IIBI, NHB, NABARD, these can be excluded from the calculation of the NDTL. For a scheduled bank other than the state cooperative bank, the aggregate liability of such a scheduled bank to the state bank, nationalized bank, banking company, cooperative bank, subsidiaries bank, or any financial institution notified by the government in this behalf shall be reduced by the aggregate liability of this bank and institution to that scheduled bank. Means what? Means see, for example, there is one scheduled bank, right? For example, say Bank of Baroda, and one other scheduled bank, say simply State Bank. So whatever loan given by the Bank of Baroda to State Bank, means say liability means simply they are having some deposit. For example, they are having 100 crores, right? And State Bank is also having suppose 90 crores with the Bank of Baroda. Now in such cases, to calculate the NDTL, State Bank and Indian Bank of Baroda, they are having deposit to each other. Both are the scheduled bank. In such cases, they can nullify it. So Bank of India will say how much deposit we are having with other bank, only remaining 10 lakh, because for State Bank is having with Bank of Baroda 90 already, right? So only they will count only 10 lakh as a liability. Okay, so simply they can nullify each other, for the calculation of the NDTL. Now the scheduled commercial bank are required to maintain the minimum CRR up to 90% of the average daily required reserve for operating fortnightly on all days of the fortnight. Okay, so what is the requirement now? CRR requirement nowadays is 90% of what they have to maintain. Okay, so whatever CRR stipulated by RBI, out of that 90% you have to achieve anyway. Okay, so reporting, how it happen? Reporting happen fortnightly basis, and calculation happens daily basis. You have to calculate it on daily basis, and you have to report RBI on fortnightly for all days of the fortnight. Now applicability of the CRR. So all scheduled commercial bank, including the RRB, small finance bank, then payment bank, local area bank, and primary urban cooperative bank, state cooperative bank, or even district central cooperative bank, unless stated by the contrary. So all are have to maintain the CRR, right? So if the schedule, if means what? Simply scheduled commercial bank has to maintain the CRR, simply in one line. Okay, now written on the CRR. How RBI will come to know that you are maintaining CRR or not? So simply maintenance of the CRR shall be reported to RBI under the following statutory norms. So for that purpose, we have to file the form A return. This is mainly for the scheduled commercial bank. It may be RRB, small finance bank, payment bank, or the local area bank for all scheduled commercial bank. And form B is mainly for the scheduled commercial bank which are for in the cooperative sector, that is in cooperative bank, scheduled cooperative bank. And form I is for simply the non-scheduled cooperative bank. So very simple. Form A for the scheduled banks, including RRB, small finance bank, payment bank, and local area bank. And B is mainly for scheduled cooperative, and I is mainly for non-scheduled cooperative, right? Now interest on CRR. So we are not getting any interest whatever the fund we maintain in the form of cash reserve ratio. We don't have any interest. Bank is not getting any interest. So RBI do not pay any interest on portion or full portion of the CRR. Okay, we are not getting interest on the CRR. Now return. See, every scheduled bank has to submit the return signed by two responsible officer, right? So return should be signed by two officer of the bank to the RBI. Now return to be filed on each alternative Friday, and this has to be sent not later than 7 days after the date to which it relates, right? So each alternate Friday means what? Simply fortnightly basis, right? We have to file the return, right? And that should not be late than 7 days. If so, Reserve Bank may permit the presentation of the provisional return fortnightly to be allowed by the final return within 25 days after the date to which it relates. Only where it is not possible, some banks are geographically very much away. For them only the RBI permit that they may give some exemption. RBI may give some relaxation, not exemption, relaxation, that you can present the provisional return only fortnight basis. Then final return you can submit within 25 days. Okay. On every alternate Friday or on close of the business, the detail of all the demand and time liability should be submitted within 7 days. Obviously, the NDTL also you have to submit fortnightly basis on the close of business hours. Okay, yeah, that is what every alternate Friday means. It is fortnight, right? So Friday, if Friday is a holiday, then as per the NI Act, if it is a holiday, then return should be submitted as on the preceding day. You have to submit preceding, not you have to wait for the next. Okay, if there is a holiday, you have to take care. You should submit within 1 day advance. The last Friday of the month is not alternative Friday. In such cases, special reports should be submitted on the last Friday of the month. Okay, if last Friday of the month is not alternate Friday, it may happen. Last Friday may not be the alternate Friday. In such cases, you have to send the special report to the RBI mentioning your returns and the details about the demand and time liability, and that should be on the last working Friday of that month. Okay. Now, what is the penalty if you do not maintain the CRR? In such cases, failure to file the return as required to attract the penalty under section 42/4 of the Act. Okay, so non-maintenance of the CRR stipulation attract the penal interest to be paid to the RBI. So see, if you are not if you are maintaining CRR, you will not get any interest from the RBI. But if you do not maintain any, if you lack, or if you not able to maintain the proper stipulation in the CRR, in such a cases you have to pay some interest to the RBI. Okay, so see, it is very interesting. What is the interest rate? What is the penalty? See, during first fortnight, whatever is the short amount, what is, see, if you are having 100 rupees as your NDTL, 90 rupees you have to maintain compulsorily, out 90. Okay, 10% is leverage, but 90 you have to maintain, because 90% is the provision. So on first fortnight, if you are not able to maintain, then 3% plus bank rate is the charge. Means what? So if you are only able to maintain the 80, that means how much shortage? 10 out of the 90. So 10 is the shortage. So on that 10, you have to pay 3% plus bank rate as the charge, as the interest to the RBI as a penalty. Now, if your shortfall continue for the second fortnight, then interest, the penal interest will be 5% plus the bank rate. And if the shortfall still persists in the third fortnight, then every director, manager, or the secretary of the bank who is knowingly and willfully a party thereto shall be the punishable with the fine. Okay, so in third quarter, if subsequently you are not maintaining the CRR, then director of the bank, and then we are manager here, not particularly the branch manager, the higher authority, say a managing director or like that, and the secretary, higher position only, they will be getting fine from the RBI. In that case, the RBI may also prohibit the bank from accepting the fresh deposit. So RBI can think that they are not maintaining the CRR, means something is not well in that bank. So they can have direction that they will say you don't accept the fresh deposit. When the penalty is imposed, the amount has to be paid within 14 days of the notice. Suppose RBI imposes some penalty within 14 days, within 2 weeks, that is 14 days, you have to pay that amount to the RBI. Okay. Now cash reserve ratio for CRR for the non-scheduled banks. So CRR fund need not to be maintained with the RBI by the non-scheduled bank. So the non-scheduled bank can keep the CRR fund with themselves in the current account with say RBI, SBI, or any corresponding bank. Okay, so why, that's why we can say the why that many bank in their name itself, in the comma they write scheduled commercial bank or the scheduled bank. So name indicating scheduled bank, that some part of their money is having with the RBI, so it implies that they are more secure, right? That's why they are writing on their board itself, this is scheduled bank, right? So why the non-scheduled bank is having some leverage? Because they can maintain the cash reserve with themselves, or they can maintain with the current account with RBI, SBI, or any other bank. That's why we can say they are less secure. Okay, CRR fund should not be less than 3% of the demand and time liability as on the last Friday of the second preceding fortnight. So what is the CRR fund for non-scheduled bank? They have to maintain minimum 3%. Minimum 3%. You should not be less than 3% of the demand and time liability as on last Friday of the second preceding fortnight. Okay. So second preceding fortnight means, see, fortnight means having 15 days period. So second preceding fortnight means say approximately say 1 month. Okay. So whatever the last Friday in the in 28 days, whatever is the last Friday in the 28 days, that should be that period should be counted. Okay. So CRR fund is minimum 3% of the NDTL as on the last Friday of the last 28 days or the second preceding fortnight. Now the bank has also to submit the return to the Reserve Bank before 20th day of every month. So CRR date, what is the date? The date is fixed, 20th of every month they have to submit. For what? This is mainly for the non-scheduled banks. Okay, non-scheduled bank. So it is important to note, it is you have to remember this also, right? The non-scheduled bank have to report the CRR on 20th of every month. Okay. Incentivizing the bank credit to specific sector, exemption from CRR maintenance. So see, if you are so basically that is some scheme launched by the government during mainly the COVID period. Okay, that is incentive for the bank credit to specific sector, and they will be getting some exemption from the CRR. So what is that scheme simply? So banks are allowed to deduct the equivalent amount of the incremental credit disbursed them as a retail loan, right? So that scheme mainly focusing during the COVID. So it may retail loan means what? Simply the automobile loan, residential housing loan, or loan to MSME. Over and above the outstanding at the end of fortnight ended 31st Jan 2020 from the NDTL maintaining the CRR. Means what? See, suppose on 31st Jan 2020 you are having 1000 crore as outstanding retail loan. Now whatever you have given the additional loan, for example you sanction the 100 crores after the 31st Jan, so incremental will be 100 crores, right? So that 100 crores you can exempt from counting the net, from counting of the net time demand liability, right? So whatever the net demand time liability, from that exemption you can subtract the incremental credit. Okay, that is the leverage, that is the incentive given by RBI in the form of direction to the RBI, to the banks. Now for a period of 5 years from the date of origination of the loan or tenure of the loan, whichever is earlier. For how much period you are getting that? For a period of 5 years. This is very long period, right? So the great benefit for the bank, for the maintenance of the CRR, they will be less amount. Okay, so calculation will be less amount. So that can be, that benefit will be for 5 years. Okay, so 20 to 25, that means around we can say 5 years we are getting that benefit. Okay, 5 year, remember. Moreover, scheduled commercial bank have been allowed to deduct the amount equivalent to credit disbursed to new MSME borrower up to 25 lakh per borrower. So if you are sanctioning loan to new MSME borrower, there must be new, right? That means he should not avail the loan earlier. If it is first time availing the loan, and per borrower 25 lakh rupees you can exempt from calculation of NDTL. Okay, this is also the additional incentive given by RBI to the banks. Now let's talk about the SLR. SLR stands for the statutory liquidity ratio. Statutory means what? It is by law, and at what law? Section 24 of the Banking Regulation Act. Now a scheduled bank shall maintain the asset or the value in which shall not have less than some percentage, and limit is 40% of the NDTL. Okay, so what is the limit? So minimum and maximum for SLR is, there is no any stipulation for a minimum, but a maximum should not be more than 40%. Up to 40% of the NDTL you can maintain the SLR. Okay, SLR stands for the statutory liquidity ratio. Okay, and that should be counted on what? Counted last Friday of the second preceding fortnight. Last Friday of the second preceding fortnight. Now the minimum no stipulation, maximum 40% of the NDTL as on last Friday of the second preceding fortnight. Now SLR can be held in the form of cash, it can be in the form of gold, or it can be in the form of the investment which are in the eligible security. Okay, it may be in the form of cash, gold, or the investment. Okay, so whatever is the gold investment, that value you have to take into account the current market price. It should not be more than the current market price, right? So whatever you have purchased, if the price has been dropped now, you have to take the current market price only. Okay, so the SLR can be maintained in the form of cash, gold, or the approved security, or the investment in the instrument that must be approved security simply. Okay, so this is all about the SLR. So limit only maximum 40%, no minimum stipulation, and reporting last Friday of the second preceding fortnight. Okay. Now how to file the return on the SLR? Simply there is a monthly return has to be submitted by the bank to the Reserve Bank by every banking company, and return has to be submitted not later than the 20 days from the end of the month. So there is a monthly return, and that should not be delayed more than 20 days. Okay, if such a return is if there is a Friday is a public holiday, if such a Friday is a public holiday, the return should be prepared as on the close of the preceding working day. This is also applicable in the same way like a CRR. The maintenance of SLR shall be reported to the Reserve Bank of India under the following forms. So what will be the form? Form VII is mainly for the scheduled commercial bank, including RRB, small finance bank, payment bank, or the local area bank. Form I is mainly for the cooperative banks, right? So the two forms are important. Form VII for the scheduled commercial bank and I for the cooperative. Now penalty of default. So if any bank is not maintaining the SLR, what is the penalty? Again the same penalty is there. on default of the amount if the balance falls below the minimum requirement on alternative day. So what is the current SLR? It may be 18.5, right? So you can check out. Now for first fortnight, 3% of the bank rate, 3% plus bank rate will be the penalty. For second fortnight, if you are continuing non-maintenance of the CRR, you have to pay 5% plus the bank rate. See, simply, what is that? Simply, if you are having 100 crores as the MDTL, so suppose 18% is the SLR maintenance required by RBI. So 18 crores you have to maintain. No, suppose you are not able to maintain and you have maintained only 8 crores. So what is the difference? Difference is 10 crore. So on that 10 crore, the penalty will be 3% plus bank rate. Suppose bank rate is 8%. So 3 plus 8. So 11% you have to pay as a penalty on the difference amount which you have to pay. Okay, this is the calculation. Now for second fortnight also you continue the same. Then for the next period you have to pay 5% plus the bank rate. Okay, that 5 plus, suppose 8% is the bank rate, so it will be 13% interest you have to pay on the difference amount, not the shortage amount. Okay, and if you are continuing the default on third Friday also, that is next fortnight, then every director, manager or the secretary, there is simply the higher authority in the banking is will be punishable with the fine, and RBI has a right to waive the penal interest also. Okay, if there is some genuineness. Next, asset in India. So the quarterly provision of asset. So as per section 25 of the Banking Regulation Act, we have to specify the asset in India to the RBI. Okay, now see in the detail. The asset in India, every banking company at the close of business on the last Friday of every quarter. Remember, when we have, at what time we have to report whatever asset we are having at the end of every quarter, whatever the last working Friday. See, Friday is very much important in the banking, right? Because we can check it out here, CRR, SLR, then asset reporting, that is happening at the end of close of business of Friday. So the Friday of every quarter we have to report. Okay, if that Friday is a public holiday, then preceding working day you can take into account. Okay, and that shall not be less than 75% of the time deposit liability in India, right? So whatever asset you are having, that must be 75% of your liability, say in simple words, right? So that means asset means what? Simply, suppose you are having 100 rupees, out of that means what? Only 75% you can give as a loan. Got it? So this is what the net demand time liability. Okay, so whatever asset, that should not be less than 75%. Now within 1 month from the end of every quarter, submitted to the Reserve Bank a return in the prescribed form and the manner. So when to count that, at what day you should send that report, right? So see, whatever the asset the bank is having, bank has to report on every Friday, on the Friday which is last Friday of the quarter, and that should be submitted within 1 month of end of the quarter. Okay, RRB are required to submit the report to NABARD. So the asset report by RRB should be submitted to NABARD. Okay, it is important. The asset may be in the form of cash or gold or approved security, right? Whatever asset we are having, that may be in the form of gold, cash or the approved security. Now this provision means to ensure that the resources mobilized by the bank operating in India, especially by the foreign bank, largely invested within the country. Okay, so see how tactically the RBI is working. Foreign bank is coming in India to earn the profit, right? Obviously, but RBI ensuring that they should maintain the asset in India only. The asset in India include the export bill, import bill, which are payable in India. So any export bill, import bill which is payable in India, that can be the part of asset. Now the paid up capital, reserve or any credit balance in the profit and loss account of the banking company shall not be treated as a liability. Okay, again that we have already discussed. For calculation of liability, we are not taken into account the paid up capital, reserve and the credit balance in the profit loss account. Okay, so this is the end of this chapter. You can subscribe us on the YouTube Banker Zone. You can join our Telegram group Banker Zone CIB, and you have to download the application from the Play Store, Banker Zone CIB. Thank you, friends.